Hi all, very good evening. So this is RP here from Billionaire recording video on Nifty. So we'll do Nifty analysis based on price action indicators, and most of the part of analysis will be based on Elliott Wave, which helps us to better forecast the market moves than any other method. So yeah, let's get started. Since past couple of days, from Wednesday actually, I was not able to record video on Nifty. I had the picture in my mind for the next moves, but yeah, I was not able to do it since I was relocating. So yeah, COVID is over, so work is resuming. So yeah, let's see how it goes. The office is starting from next week, so there may be a couple of less updates, but I'll try to post it as regularly as possible during the daytime. In the evening, we'll try to make videos, but yeah, if any day I'm not able to make, so just remember that making videos and posting the analysis is also my passion for the markets. And yeah, you could say I'm a little bit addictive to the markets as well, since because of that, you could say that I would post it. I will try definitely from my side 100%, but yeah, sometimes it may not be possible to record the video, so I would post charts on those days. So yeah, in this busy schedule, I'm making sure that to post a proper analysis for you, so you make sure you subscribe and help us grow more. So that's what our request would be. So let's get started. Nifty, as you can see here, it's making a W kind of pattern. So someone might think that this is a double bottom or a W pattern and it will break and go upside. So as we said in our previous videos, until Nifty breaks 18,600, we are 605, we are not going to have any bullish view on the Nifty, and we will consider that it is going to fall downside. So yeah, since this looks to be coming to reality, so Nifty has traded in consolidation and dropping continuously. So here you see that this is blue line, it is a 13 EMA, Nifty is trading below that. That indicates a short-term bearish bias, and this is a 48 EMA, which is at 17,300. So yeah, this is medium-term moving averages. It's trading below, above that. So yeah, but I'm expecting it to touch there, and it may take support near that and then bounce back. Our indicator shows a bullish move, but it is turning parallel now. This is not bullish anymore. So yeah, it could be a consolidated drop on the downside. That's what we are expecting. MACD is about to give negative crossover on daily chart. So yeah, and even you can see here a trend line. If you draw from these lines, you would see that there is a trend line resistance that Nifty has faced, and it has started the drop. So yeah, in our last week's video, we were expecting it to make one more high and then drop, but that didn't happen. Yeah, but there was an entry condition given, and that was not triggered. So hope that helped us to save our position. At the top of the trend line, like somewhere near here, I was expecting a big red candle covering previous couple of candles, but that didn't happen. So I was not exactly having a bearish view, and since this move is also slow, you will not be able to properly recognize whether the fall has begun. So until some indicators show us that there is a potential drop next, you cannot conclude that. Yeah, but we had a bearish view that Nifty is going to make one more low below this. That's what we had discussed in our past videos. If you have watched those videos, you would be in a better position to understand the next market moves, and you would be prepared actually, right? So if you have some positional trades, you would start cutting those positions here. Okay, I'm not talking about long-term trades or your portfolio, but I'm talking about the swing trading that you do. And yeah, if you have some swing positions which are heavily on long side, you could start cutting the positions if you know that somewhere around these levels it is going to drop, right? So let's get started with the Elliott wave now. So Elliott wave view is like this. We had expressed our view in previous videos where we mentioned that Nifty is in triple complex correction, W, X, Y, X, X, and Z. So that's final Z wave is pending, and we were expecting it to end somewhere near 18,200 odd levels, right? Yeah, but it looks to have started the drop. So a couple of reasons for considering the bearish view and not considering any more top about this 18,115, right? 18,115 was a sharp candle. This was a candle which hit the 18,115, right? This was a sharp candle, and this you could say an exhaustive move. So couple of hints that I'm going to give you, which will be helpful for you in the future as well. So one of the hint is it was exhaustive move, right? It was a big candle, and at the top, when such big move comes, then be prepared. There could be a reversal. Okay. Another thing to identify the reversal is finding a bearish engulfing candle like this one at the top of X wave. Here there was a big bearish candle covering last 3 candles. So same thing here, a bearish engulfing candle here. Okay, but here it made bearish harami candle, you could say, right? The red candle is inside the big candle, right? So yeah, this was not that strong signal for us to consider the bearish move, but now we are getting those signals. MACD is going to turn negative. Here there is a channel resistance, right? Here there is a channel resistance. Then couple of other things, that bearish Harami pattern is formed. Nifty is continuously falling, it's not recovering, trading below 13 EMA. So these are a couple of signals telling me that Z wave has already started. Okay, so we are expecting one more drop as we discussed in our previous videos. Anything below 15,671, maybe 15,500 or even 300. Okay, these levels we can expect. We will draw those levels later on. Let's first consider one drop and then retracement. Then we will be in a better position to forecast the moves on the downside. So yeah, so this is, you can say, the channel that we drawn, right? So I'm not sure how many analysts had drawn this channel. So there is a method to draw the channel. So yeah, I would tell you that when you draw a channel, you have to pick up the points, the top point, okay, and the next bottom point, and then when you get a 3 points like this, then only the channel will be a perfect. And there are methods of identifying the moves with other methods, but yeah, channel is plotted on these 3 moves. So this blue channel, it has respected this channel and dropped from there. So that is one thing that you need to remember. Another internal channel which of lower importance has drawn also, right? So here you could see that these 3 points were considered and move was expected towards this. Initially I had expected, once it gave a bounce on these levels, I had expected it to go towards this. So this is how you should draw the channel. You can ignore the purple channel, but remember the blue channel here, right? Okay, so this blue channel is important now for us because it has dropped from there. So this is how we had projected W, X, Y and XX and Z move. So XX looks to be completed and Z looks to have started. Let's move further and see what is happening. So let's first check this Y move. Okay, let me tell you Y move and why we are considering it is completed. Sorry, this XX move from Y to X, we are considering this move, right? So this is not an Y wave, but this is XX wave. Let's check that. So this is XX wave where we are considering this is a channel bound move, by the way. Again, a channel bound move is not considered as a bullish signal. So yeah, if it did not sustain this channel, if it has broken this channel and moved higher, I would have considered that 18,604 would be broken. The strength was lacking here, right? And that's why I have labeled them as W, X, Y, XX and Z. So this is again coming upwards, but it is coming slow. We were expecting it to go towards this, but it didn't happen and it has broken out of the channel. So this is another signal for us that Nifty has started a drop. The major channel that we were expecting has been broken. It was broken in the last week itself. It should have been our signal, but considering this candle, we were expecting it to go higher and then drop, right, like this. But it seems that's not the case and our analysis didn't work. So these 3 candles are again bearish. After our last view, it didn't work out well. So moving next, another thing to tell you that so this is Z wave. We are considering Z wave completed here and the move is outside the channel. Also it is reaching near to 0.618 Fibonacci of the last move. So when you plot Fibonacci on these numbers, you get 17,488 as a 0.618 Fibonacci. At one point it has given the bounce, but last Wednesday it again dropped and made a red candle. So I'm expecting it Nifty to trade below this and then it could give bounce and then drop. So that's what can happen. Here you can see that MACD is turning red. There's only 1 bar on the histogram and price is also negative, but we should not trust that unless 2-3 more bars get formed there. So 2-3 more days will give us clear picture, you could say, as per the MACD, but pretty much in line to our expected move is on the downside, right? That's what we are expecting. So now we have to see what is happening here, right? What is happening here in this area? We will check that and we will try to understand the potential end of this drop. Okay, then retracement and then drop, right? So we are going to just talk where it will end and how much it can bounce and then it would drop, right? So that's what we can understand. One more thing I have to tell you on the daily chart is notice this move, okay, this W move, and what I'm expecting it to be repeated here in the Z wave. Okay, so Elliott wave tells us the theory of alteration. So this is the dominant trend, right? These are the moves in the dominant trend. So current trend is downside, right? So these W, Y and Z wave are in the direction of dominant trend. So this W, if it is complex drop, then this X wave will be simple drop. This is alteration theory. So that's why you should remember that market participant keeps you guessing. So you would think that this will happen again here and you would like go for option selling or something because this is a slow drop. You would go doing same thing here. You will be punished because it will be a fast drop. So move here is slow, move here is fast, move here is complex, move here is simple, right? So now again a complex. So that's what the alteration theory is. So hence I'm saying this will be repeated here. So this you need to remember. If yeah, similarly here also it was plain zigzag ABC. Here it's not, it's going like this, right? So this is how the alteration guideline of Elliott Wave Theory is. Moving on to the next, you need to remember that point. So yeah, now what we were discussing is we want to check this move now. Okay, where the drop is from 18,115, we want to discuss this drop as per the Elliott Wave Theory. So as you can see here, this move is again a channel bound. This is dropping in the form of channel. This is a slow drop. This is not a fast drop as like previous fall, making engulfing candles, right? Bearish engulfing candles. It's not like that. So here we are expecting ABC move, which is called as W. This X is a expanded flat correction. Then again this ABC move on the downside, which is Y correction, completed here near the channel. It gave bounce back as X wave ABC, and again the final move is in progress, ABC on the downside. So we had given you these details in Wednesday's session during the market close, when there was expiry, that I had given a view on the channel that it is going to drop and make one more low, as there is no divergence on MACD 15-minute chart. We do not see that, but the move is getting smaller. So A, B is completed here, and C wave is in progress on the downside. So let's find out the target for the C wave or a Z wave on the downside. So by the way, again you see here a complex correction, W, X, Y, X, X, and Z wave. Okay, so Z wave is going on the downside with internal ABC moves. Okay, so this is ABC drawn here. So unless Nifty breaks this X high, we cannot assume that retracement has started as of now. Okay, you can take even consideration of 17,563 to go for upside. So some retracement will come and then it will drop. You can write that retracement. But yeah, we need to wait for this move. So till now we had discussed bearish waves itself, right? So let's check the target of Z wave or C wave. So one way to get the target for Z wave is by plotting Fibonacci extension on X, Y, and XX. Okay, so this is how you should get the Fibonacci. You plot a Fibonacci extension there. So this is the Fibonacci extension tool, by the way. On the trading view, this is available. So when you plot that, draw a 0.618 Fibonacci, that is minimum target, and 1 or 100%. This is 100% you could call. And yeah, this I'm expecting it to go towards this level. Okay, so again, alteration theory, W was big, X was small, so Z will be big, right? Alteration, this is a dominant trend, right? These moves W, Y, and Z are in the direction of the dominant trend, and they will alter. So W was big, X was small, and then Z is big. This way it works, right? So this was expanded flat XX wave, and this is a zigzag correction, right? So this is again alteration. So same thing has not been repeated here. so you need to remember the alteration theory very precisely. This will be helpful. Not only if you do not know Elliott wave also, then don't worry, we will create those videos. But yeah, in each videos I'm trying to explain the concept, how the market moves. Yeah, so now the Z wave, what we are expecting is this, and minimum this one. Okay, so if tomorrow, if it opens gap down and opens near 17,416 and breaks up, breaks this high, breaks this channel, 17,535 break will be the channel break in that case, right? Because a drop will be somewhere here, and then it will break this swing of B wave and go up. So that will be our signal that Z wave is over. Okay, but I'm not expecting it to stop here. I'm expecting it to drop further, but this will be a slow drop, as I said. And we should we should only look for intraday opportunities in this case, because this is final Z wave, C of Z wave actually, right? So if you take positions, carry forward positions somewhere in between these levels or 17,300 even, don't ride for the whole move. Okay, when we are in a final move, you should be cautious and look for some reversal opportunities near the targets. Okay, so that's what you need to do, and you need to ride for the pullback in that case. So that will be a better risk to reward ratio, right? So that's what you need to remember. Moving on to the next, I had shown you this view, right? So next, another view would be to consider this complete drop as what to say, a complete bearish count. Okay, so let's open the trading view and check here what is that bearish count is all about. I'm not considering this to be a perfect zigzag. So zigzags will have 5 moves. Okay, 1 2 3 4 5. Okay, so this will be called A. It will bounce back, it will drop like this as a C wave. So this will be called as a zigzag correction. In a zigzag correction, A will have 5 waves. So 1 2 3 4 5. So 5 looks to be completed here. If it fails to break this low, what was that low? Let's check that. I think it was 17,442. So if Nifty tomorrow opens gap up and goes above this channel, then assume that the second alternative wave looks to be in progress. So in that case, it will bounce back and then drop. Okay, so here you could say that A wave already completed, B is in progress, and C will be dropping downside. So C will be more powerful and it will go deeper, right? It will break eventually 17,000. That's what we can assume. But this is an alternative view, means I have low confidence on this move. Okay, so tomorrow, yeah, it should break this and make some high. What if it breaks, let's say this channel somewhere around 17,570? If it breaks that, right, we had checked this 17,000. What is that move here? Yeah, if it breaks this, we can assume that it is going up and then ride for the upside. So what will be the upside target? In that case, you use Fibonacci extension and approximate targets we can get. I cannot adjust it properly right now. Okay, so approximate, it will go higher, breaking the channel. Let's zoom it out and let's consider the C wave. So what can consider? We can consider it is going towards this as A, B and C correction. Only if it breaks 17,563, we can assume that it is going on the upside as this correction, B wave correction, right? Okay, and then it would drop again. You should be prepared for the drop from these levels, but this has low probability as I'm like finding this is not a correct correct move on the downside. Yeah, right. So moving on to the next part, what we can assume it so this 5 wave moves we are clearly seeing here. So I'm not expecting it to 5 to extend more, right? So 5 cannot extend more, or if it has to extend, then it will make an ending diagonal pattern like this. Okay, it will make ending diagonal and then break upside. So yeah, this looks to be a little ugly, or you could say this won't follow a proper guidelines and it will have some flaws in the wave count. So I'm not in a favor of this particular alternative view. But yeah, we have to be ready with the plan B. Even with the markets, you need to have a plan C as well. But yeah, as I said, I'm more inclined towards WXYZ and move towards 17,250 or 17,300 levels. So don't assume that it will stop here or it will pull back from here. Okay, so these are the levels which has good probability, but it's not exactly there it will stop. So lastly, let's check the option chain data. That will make a couple of things clear. So here you can see that 17,500 has become a resistance. Last Wednesday there was heavy call writing as there was a drop, right, in the Nifty. There was call writing on all those strikes. So now this expiry has 17,500 as a second major resistance. So major resistance is 18,000, right? It has biggest call open interest. So this is called as biggest resistance. We had created option chain detailed analysis video as well. You can watch that and you would understand how to read option chain and how to use it on the expiry day. So based on that, this is biggest resistance. So we cannot we can expect that Nifty won't cross this. It will be a miracle if it cross that. And yeah, this one will be second major resistance. So tomorrow this will become more call writers are expected to join the party. Here you can see 17,000 as a major support because that has the biggest number on the put side. So this is put open interest, and second major support is at 17,500. So you can clearly assume that Nifty is trading too much below 17,500. It is trading below 17,500 for quite a long time. So it will slide down towards the next support, and next support is 17,300, which is third biggest number, right? So this is the biggest number, 22, then second biggest numbers, and then the third biggest number. So all the put writers here would flee on the downside. They will take short positions, put short positions of 17,300. So that will become a support. I'm assuming from here it should bounce back and give some retracement and then it would drop. So that's how all our view is on the Nifty for next week. So hope you like the analysis. If you have any doubts, ask in the comments. By the way, this is just an educational video, not an investment advice or a trading advice. Do consult your financial advisor before taking any trading decisions. Any profits or loss encountered by following this view will be your own, and we are not SEBI registered analysts. So that's all. Have a good day. Bye bye.